Hi, this is GBPUSD and today it's Wednesday, 28th of August 2013 and the time is 7:26 GMT. We are looking at the daily time frame of the pair and I will take it to the H4 time frame where we set up our trade. We see that the market, the pair made some upward move when we after we entered, but then it moved sideways and made the plunge yesterday, from which it started recovering, and now we see some bearish candlesticks again. The momentum here, the biases here start look bearish again on the H4 time frame, but this bearish Kumo breakout we see here is not valid because Chiku span, the green line, is inside the Kumo. It's below that price action, but it's not below the Kumo yet. So it would be below the Kumo if it was down here. Or if the price keeps moving below the Kumo and it keeps moving for another 6, 8, 9 candlesticks, so that Chiku span copying the price comes here below the Kumo. So time is in our favor here. We had those signs that show a reversal in the mood, but this move looks more like a correction than a reversal. If we add, I will add some other tools here. If we add the Fibonacci levels on the last upward wave, we will see, and if I remove Ichimoku so I make the picture clearer for you, we see that the price since the upper point of the move, and that's why I gave you the signal here, because I thought it would go down to the 50 Fibonacci level and would rebound, but it didn't happen. So the price fell down in a corrective move. It went sideways for a while at 50 Fibonacci level, but it decided to drop lower. It made a big plunge even below 75, and it came back up to 61.8. It stand there for a while, actually for 12 hours, not a while, and now it goes down again, but we will see if this downward movement will continue or will reverse. So we see where we are, where we stand in terms of Fibonacci ratios. Let me remove Fibonacci now, and let's insert Ichimoku again and go back to the daily time frame and see the bigger picture. On the daily time frame we see that the pair is moving above the Kumo, but the Kumo, which is just below the price action, is a flat top Kumo, and flat top Kumo acts as a magnet for the price. Right now the price is making higher highs, higher lows, higher high and higher low, and it's in the process of forming the next higher low. But what we want to know is how soon it's going to retrace and to resume its uptrend. On the Ichimoku chart here, on the daily chart, we see that we had the first sign of a downward, of a corrective move, when price crossed below Tenkan-sen, the red line. That was a signal that a corrective move is going to happen, and it happened. Now we want to see where it will finish. If we insert a lagging indicator, parabolic SAR, which I like a lot because when it gives signals, they are valid because it gives them only after they are as much confirmed as possible. We see that we have bearish dots on the daily chart, but let's go and have a look. And the moment the price went below Tenkan-sen on Ichimoku, we had the first bearish dot on SAR. You see how the two systems coincide. They give the same signal at the same time. When the pair crossed below Tenkan-sen on Ichimoku, SAR gave the first dot of reversal. Which may not be a reversal, but it's a downward move. Let's see what MACD showed us. Do you see where we have a bullish histogram, which means that biases are bullish, but the signal line popped out of the histogram exactly the moment that price crossed below Tenkan-sen in Ichimoku system, right at the moment when SAR gave us its first bearish dot. Let me insert a vertical line to show you the point where all systems coincide. You see? When the price crossed below Tenkan-sen, the red line, we had the first bearish dot from SAR, and it was just exactly when at the moment that the signal line popped out of the histogram, because the histogram lines became smaller, which means that the bullish momentum decreased. You see, there are many people who say, many traders or many analysts who say that technical analysis tools are useless and using naked charts is better. No, because all these tools are very useful and they're based on mathematics, and mathematics is a science which goes beyond opinions and personal perceptions. So I will remove the vertical line. Let's see how what do these systems show on the weekly chart. On the weekly chart we see that everything looks bullish. The pair tries to break through the Kumo here and make a bullish Kumo breakout, but it hasn't succeeded yet, okay, on the Ichimoku system. Let me take this. Okay, I can't remove it without messing up with the layout. Anyway, we had already bullish dots from SAR. They are far away from the price, from the candlesticks, which means that the bigger the distance, the stronger the momentum. So it means in terms of SAR, of parabolic support and resistance indicator, that the upward move is very strong. It has been just born. So on the other hand, the leading Kumo is horizontal on the weekly chart, and it's horizontal and it has a flat top and a belly, a curved belly down, which is a bullish formation. But of course we have the half of it. We want the belly to be completed, and we want the secuspan A, the line which makes the lower border, we want it to cross with secuspan B, which is the line that makes the upper border, in order to make sure that everything turned bullish. And of course it's easier if we see a bullish Kumo breakout up here. So you see how the three systems end. We see that the signal line is going out of the histogram, and the histogram, the bearish histogram, is gradually decreasing, and now it's just at zero level. So we expect a boom. We expect the bullish histogram being born here, going up. That's what we expect. At zero line, there are changes in the momentum, and we see here, we expect from the picture that MACD gives us, we expect to see the bullish histogram going up, building up, which represents the bullish momentum. So let's remove now the MACD and the PSAR and the Ichimoku, and let's go to H4 and insert oscillators. And we see when the basic rules are these. We have the stochastics here, and the stochastics is an oscillator that gives us very important reversal signals depending on how it behaves above 80 and below 20. So when stochastics oscillator is above 80 at overbought zone, we expect a reversal, we expect a bearish reversal, and the moment it touches the 80 level line and plunges below it, we expect a downward, we expect to see a downward move. The opposite is something we expect to see when the oscillator, when stochastics are below 20, which is the oversold area, and we expect to see a bullish reversal, buyers jump in, and when it touches the line, the 20 line level, we expect to see an upward move. When after having touched the 20 line, the 20 level line, after the plunge in the oversold area, it goes above the 20 line, which represents a bullish move. We had this happening after the plunge yesterday. We saw the bullish move happening. Now we see that it makes a small angle, which represents this minor move, but because it moves inside this zone and to the upward direction, we expect it to go up. And to see it even clearer, we go to H1 time frame, and we see that the upward move is very young. A new upward move is very young and is being expected now. The yesterday move is shown here. We had the stochastics plunge in the oversold area, and they touched the 20 level going upwards, giving these strong bullish candlesticks here many hours ago. We had this upward move, and then see how this fall was represented, was reflected to the stochastics. Exactly when it happened when the stochastics touched the 80 level, went above it, which is the overbought area here, and they plunged down and they exhausted their move, and they are on their way up again. That's what the H1 time frame using the stochastics shows us. So we expect now an upward move we expect an upward move, and we will watch it deploying. We will watch it happening till the price goes up, reaches our long entry level, and starts going above it, giving profits to us. So these tools and their way, interpreting them and combining them, is what gives us the reassurance that we are on the right track. Of course, price and market is the ruler here. Market is the king and the queen. Market has the first and the last word. We watch it, we observe it, but these tools doesn't let us go sail to this ocean without a compass. They are our compass, so we always know where we are going, and that's very important. That's what makes potential losses into secured profits. It turns potential, this knowledge and the knowledge of using these tools turns potential losses, which would happen if somebody didn't know what is going to happen and was panicked and scared and was closing positions at a loss. If a person was here and was afraid of a fall and was desperate, would have lost this amount of money. But we know that there's going to happen a strong reversal, so we wait. We will not only lose our money, but we are going for profits. Okay, this is it. Thanks for watching, and happy pips.